Hello, and thank you for joining us at xm.com for this Forex Preview video. With inflation soaring around the world, Eurozone CPI data for June will likely point to another hot print. But what would that mean for the European Central Bank and, of course, the euro? I'm Cristina Marujos. Joining me today is Cristina Parthenidu, investment analyst. Cristina, the ECB has well telegraphed that it will tighten policy at its July meeting, where a 25 basis points rate hike is essentially fully priced in. But could a strong inflation print push ECB policymakers into raising rates more aggressively?
Hello, Christina. That's right. Christine Lagarde has confirmed that the European Central Bank will conclude to a 25 basis point rate hike in July, and that will be the first rate hike in a decade. But like other major central banks, that will not be the only one. Friday CPI data are expected to show inflation climbing to a new record high at 8.4% year on year in June, which might be another evidence that price growth is not peaking yet, as central banks have been expected, which that might be, the central bank will need to further tighten its monetary policy because of that, and at a faster pace to achieve its 2% price target, especially as inflation expectations are on the rise again, and governments are making plans to raise minimum wages, and labor unions are also pushing for higher wages, which could consequently create additional inflation in the territory. So Lagarde has also made the case for a 50 basis point rate increase in September, and markets expect a similar rate hike in October before a slowdown takes place at the end of this year. However, the problem now is the consequences of a faster monetary tightening might be a threat to the Eurozone economy, and particularly create sovereign risks. For the first time in a decade, central banks hope for a soft landing, but that might not be the case. Inflation concerns and plans for a stimulus reduction keep squeezing bond markets, sending bond yields to multi-year highs. More importantly, that has widened the spread between the Italian and German 10-year bond yields, which is a measure of risk in the euro area. And that suggests that fragile economies like Italy, whose debt is at 150% of the domestic output, will be borrowing at a much higher rates than economies like Germany. So that puts the economy, Italy in danger, and since it's the third largest economy in the Eurozone, that is also threatening a GDP slowdown in the euro area. Of course, there are plans for a new anti-fragmentation tool that will provide liquidity to those economies through bond reinvestment programs. Particularly, a compromise is expected to be reached by July 21st, though the history has showed that that economic diversity in the euro area might make any decisions difficult to be made, especially as the new program might be subject to the European Stability Mechanism conditionality, which some economies might oppose to undertake. So perhaps another record high inflation may not affect July's rate decision. The German and Spanish mixed CPI inflation readings have barely affected the euro. However, any potential upside surprise in the Eurozone CPI inflation could make a 50 basis point rate increase in September apparently more likely.
I see. Now let's turn to the euro. How could the single currency perform moving forward, especially in an environment of higher interest rates?
The ECB has well telegraphed its policy intentions for the next two meetings, so perhaps Friday's inflation data may not affect the euro much. Instead, any updates on the anti-fragmentation tool and potentially any data reflecting fragility, the euro area could be a bigger market mover for the Eurozone as well as any further restrictions against Russian energy products. That could be another important factor for FX markets. Currently, euro dollar is setting another bearish correction, but still above its 5.5-year lows. So let's see if bearish pressures will dominate by the end of this week, and if euro dollar will manage to it will manage to resume its downtrend this week.
Remains to be seen. Cristina, thank you so much for joining me today, and thank you for watching this Forex Preview at xm.com.